At Rising Tide Accounting, we work with business owners in all industries to understand the story and their numbers and to run their businesses in a more profitable manner. If there's ever anything that we can help you with, please stop by our website, schedule a free consult, and we look forward to getting in touch. Okay, in this video, we are going to run through how joint checks work and specifically how to enter them. But before we go through how to enter a transaction that's a joint check, I want to just run through real quick exactly what a joint check is. So first of all, your company gets a job with a customer, and then you have vendors. So whether that's suppliers or subcontractors, and you make orders from them and they do work for you and send you a bill, and then you invoice your customer with your markup and all of your work. And then the normal pay cycle is they would pay you directly, and then you pay your vendors. So that's typically how it works. But when you get into situations where you're trying to juggle cash flows and you can't quite invoice for your project, but you need to pay your vendors to keep things going, that's where a joint check might come in. And the way those work is your company, it's a job with a customer, you hire vendors, they do work for you, they send you a bill, you bill your customer, and if they don't pay in time, then sometimes the customer might opt to pay your vendors directly. So what that does is that creates a situation where you're not actually receiving funds and then passing it to your vendors. So if you don't pay attention to how to enter these transactions, it can really skew both your accounts payable and accounts receivable very quickly, because you still get the bill, you still get the invoice, but your customer is paying your vendor directly. So that's the reason these are important, and it's really important to understand what you're doing. So let's talk for a minute on why this matters and why a joint check exists in the first place. The main reason is to avoid mechanics liens on customer or end user property. Mechanics lien is when they put a lien on property or on the job in order to ensure that the vendors get paid. And what that does is it creates additional risk exposure for the customer, your customer, or the end user. So the solution is for your customer to guarantee that your vendors are paid through a joint check as the vehicle. And the intent is that protects all parties to ensure that there's no exposure for risk. But you as the contractor, or just from your company's standpoint, need to understand exactly how these pieces fit together in order to ensure that you manage those transactions correctly. So next step is we're going to go over how to enter a joint check in QuickBooks or really any other accounting system. Okay, now we are going to go ahead and enter a joint check. So on this particular transaction, there were 2 joint checks attached to the progress payment and 1 payment that went directly to the client account. So there's 2 joint checks to enter and 1 main deposit. We've already done the normal deposit, which goes against the same invoice. So now let's go ahead and tackle this joint check. The amount is 23683. So now we're going to go back over here to QuickBooks. We're going to receive payment against that invoice. That way we're sure that it tracks the invoices correctly. And we're going to make sure we select the correct project. So let's see, what job was that? 244. All right. And then that will pull up the outstanding invoice, and they're showing a balance due because we've already entered the other payment toward that. The interesting thing, or the important thing that we need to do, is instead of depositing it to our checking account, we're going to deposit this payment or receive this payment to a clearing account. That way it doesn't mess up any bank reconciliations or anything and keeps the books real clean. So that amount was 23683. 23683. And it's going to be reducing or receiving payment against this invoice. So that's it for that one, going to the clearing account. And I'm going to hit save and new because we're going to go ahead and do the next one as well. And the other joint check is over here. The payment amount is 2685.21. Oh, sorry, 4685.21. And this will be the same project. Also the clearing account. The amount received is 4685.21. 4685.21. That all looks good. And then the remaining balance on this contract or this invoice should be the retainage for this project. So we're going to go ahead and save and close. Okay, now the next thing that we need to do is pay the vendors, and we're going to pay them from that clearing account. So back over here, this one, we're going to grab the vendor name. All right, we're going to say it's going to be paid from the clearing account, and the amount is actually going to match this invoice right here. So we'll select that from the clearing account, and we'll also save and close. And we'll do the other one, pay bills. And then we're going to search for the other vendor. And grab this dollar amount. Let's make sure that's correct. 4685.21. The total balance is not matching up. So we're going to need to investigate this one further, see why the bill is not adding up to the total. Okay, so what we just did in QuickBooks was within our company file, we grabbed the vendor bill. We received payment for the same portion our customer paid to our vendor. And then we marked this bill as paid, marked the portion of the invoice that pays this bill as paid by processing the bill payment in QuickBooks, and the transaction never touched our bank account. That's how you do a joint check. Hey, thanks for stopping by. I hope you really got some value out of that material. If you did, please like, subscribe, and hit that bell. That way you're able to see more content as we continue to publish additional resources that'll help you run your business more profitably while you make sure to understand the story in your numbers. Have a good one.